Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 1st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got a lot of economic data coming out in the form of manufacturing PMI, which is the Purchasing Managers Index for the manufacturing sectors. We've gotten a lot of service sector PMI numbers, but this is for the manufacturing and more of a gauge of robustness in the economies here and across the pond. Italian PMI came in at 49.8. That one was below the expected 51.3. So anything below 50 is contraction in that economy. Anything above 50 is expansion in the economy. And we got the French PMI manufacturing number came in at 48.3, was expected 48.5, so that was in line with expectations, but still showing contraction. The German manufacturing PMI came in above expectations at 50, or in line with expectations at 53.6, which was exactly what was expected. And the Great Britain manufacturing PMI came in at 53.3, and it was expected 49.1. So that was a nice little surprise there to the upside for Great Britain. Here in the United States, we got additional unemployment claims, which is a weekly number that comes out, and it came at, and it's released by the Department of Labor, and it came out with 263,000. Now tomorrow's big number is the non-farm payroll number, and that one is more widely looked at than these weekly unemployment numbers. Then here in the United States, we got the ISM, which is the Institute for Supply Management PMI number, came in at 49.4, so below 50. First time since February, was expected to be 52, so showing contraction in the economy here. Construction spending also not very good at unchanged. Zero, was expected to increase by 0.6%. And then we also got the ISM manufacturing prices paid came in at 53 versus expected 54. Again, that number telling us that there is not any real inflation going on around the United States. And we got the natural gas storage came in at a big build of 51 billion cubic feet, expected to be 38 billion cubic feet. So another increase in another fuel. Natural gas is already at lows, but it's selling off quite a bit today, as with crude oil down back into that 43 handle today, down $1.23 as we speak, and blew right through that Fibonacci level. Yesterday it acted as support, which I thought was going to be a pretty strong support. We're just blowing right through that to the downside. Bears are really taking control right now. In gold, we're seeing a little bit of push higher here. Expectation probably is the Fed may not be raising interest rates at the September meeting, and gold is reacting to that, up over $5, and at 13.17. Then we got the bonds pushing higher as well, just slightly in positive territory. As you can see here, they were down pretty much for the overnight session, and then with this economic data coming out, we've seen a push higher in bonds. Now, this is a bit bizarre because what we were seeing right after that economic data was the equities coming off. I actually even tweeted out, has our bizarro world imploded? Usually bad economic data should signal that the Fed isn't going to raise interest rates, and the equities would surprise to the upside. Well, NASDAQ has finally started to get a little bit of foothold here, up 6 points on the day. And the E-mini S&Ps, as you can see here, are still in negative territory, but taking back some of the losses seen after that initial reaction on the economic data points here in the United States on that ISM number. This is what you can see. There's no economic data going on right now, but this was off of the ISM number. We're starting to see a bit of a bounce here, maybe some shorts covering and or people starting to realize, hey, maybe the Fed isn't going to go necessarily. So they're starting to react positively to that news. GDX, this is a trade I put on because of this economic data. It looks like gold has found a bottom, as I showed you in that previous chart. So GDX, which is the ETF for the gold miners, and it has a pretty decent implied volatility. Now keep in mind, implied volatility does have a tendency to go up when gold rallies. It's a little bit opposite of what equities do. When equities come off, volatility increases, but it has a pretty good IV in here, so I decided to put on a put spread, and I did the October 23.25 put spread and collected 62 cents for that. So I sold that spread for 62 cents. Looks like it found good support here, and hopefully we'll get a bit of a push higher here and be able to take that off relatively quickly. Charles Schwab now. I took this off because it came up against the Fibonacci. Somehow I missed that it looks like they were having earnings. This is showing the earnings quite a bit down the road. But I thought I saw somewhere where their earnings were coming out later on today. So I decided to take that off and see if I can find that. Could have been a misquote or something. Anyway, so I decided to take it off anyway because I only had it on for a couple of days, and it basically was a 25% winner on Charles Schwab. So I took that Schwab trade off. I had on the September 29.32 put spread, and I paid $1 for it, sold it for $1.25 there. So got out of that one for 25% profit in just a couple of days. You can't shake a stick at that. You got to take your profits and run when they're given to you, especially when it happens that quickly. All right, that's about all I got for you guys today. I'm going to be doing a webinar on that put spread I just talked about in Schwab, something along those lines. We'll try and find a new trade on Friday that we can implement for that particular webinar, so it's a back and forth with you guys. So I even talk to you guys, throw out some underlyings that you really like to trade, and we'll see if we can figure out the rules around those trades and build it out during that webinar. So I think a lot of people get a lot out of that when we work through it together. It has a tendency to stick a little bit more, and you can really see step by step how we do that. So you can go to protraderstrategies.com, sign up for that. That's all I got for you today. If you can't take that, take it easy.